This video is brought to you by StreamYard, professional live streaming software that you can get by going to metkevin.com/StreamYard all through your web browser. Really awesome. Check it out by going to metkevin.com/StreamYard. Right next to the link down below for the amazing programs on building your wealth. And that's CyberKevin coupon code because we're going to the Cyber Rodeo today. Let's go. You know, I have to say what's very interesting. I've been kind of frustrated about the Fed just yapping. I mean, we had the FOMC meeting, then they had Yap Week. And it's like, oh my gosh, okay, Yap Week was really annoying. Then yesterday we had Brainard have to yap. And now we got the minutes coming out today. And it's like more and more they're yapping. It's just like, oh my gosh, it hurts the stock market, right? But there's actually something interesting coming along with it. Look what's happening to the 10-year Treasury yield. Look over here. It has uninverted, and it's now at a 10 basis point spread. We go to the 5-year break even. It's fallen a good chunk, and it's very stable. So even though the stock market is feeling like some big pain right now, their yapping is actually kind of accomplishing what they want. They don't want an inverted 10-2. They want inflation expectations to come down. That's actually a good thing. It's a sign that the market, in a weird and bizarre way, believes that the Fed is now going to be more serious than they were last year in 2021. Listen to this crap now. I mean, first of all, let me just make this very clear. The market's been pricing in 7 to 8 25 basis point hikes for, I don't know, months now, okay? I mean, we've gone from January to now from pricing in, 6 hikes to 8 hikes. Big deal. It's always been in that range, right? Personally, I think we're going to end up seeing some form of a total of 10 to 17 25 basis point hikes. It's crazy, but I think they're going to stay with that slow and methodical pace because that's literally what Brainard said. She said, she said, not her name. She said methodical and consistent, steady, methodical and steady pace. These are words that Jerome Powell has used as well. And Powell's referred back to the early 2000s for, hey, 25 basis point hikes, right? But listen to now what the suits are saying. The suits are now betting that the Fed will implement an additional 225 basis points of rate hikes this year, which isn't possible unless they have at least 2 50 BP hikes because there are only 6 more meetings. So anyway, that means we could actually have a year like 1994, which is what the one hawk over at the Fed is referred to, Mr. Bullard, and his reference to 1994 is, look, we can go one one full percentage point hike and then do 25 BP hikes because we're so far behind the curve, and we can still have a soft landing like we did in 1994. Which, at least that's their argument. Although 1994 was also coming out of the early 90s recession, and in fairness, we're coming out of kind of a recession now, but we did have this massive boom in between, this post-COVID boom, right? So kind of interesting, but 1994 was also a pretty dang brutal year for bond investors. And when we look at bonds, dude, the last thing I want to buy right now are bonds because they are just... Their yields are literally going to the moon, which basically means if you buy bonds, you're losing value, the underlying principle, like crazy. Look at the frickin' 10-year. This is insane. It's now 2.63. I've been complaining since this thing was 1.7 that this thing's going to 3% plus. I don't know, probably in every freaking video now. And I still keep getting comments where people are like, there's no way it's going back to 3%. There's no way they're going to be able to push yields that high like they did in the past. Yeah, they absolutely can. There is no cap in terms of how high they need to hike. And I think this is something that you just have to buckle up for in the markets. You have to buckle up for a lot of pain coming from the Fed. Now, today's the FOMC minutes release date, where we're expecting to see how big of a taper we're going to get. In the past, we've done $90 billion a month. Maybe now we'll do as much of double because Brainard came out and said we're gonna taper much more rapidly than we did in the past. That's the same thing they told us in the December meeting. The December meeting, they said, hey, we got a lot more money now that we owe or that we've borrowed, essentially. What's that thing? We've got a shorter term duration. We need to run this balance sheet off faster than we ever have before. Okay, so what? So they come in with $180 billion taper per month starting, say, June or whatever. Big freaking deal. Finally, we would expect some policy normalization, right? But obviously the market is reacting to these 10 years jumping. And so, I mean, quite frankly, the easiest thing to do when it comes to the stock market is just not look on days like today. But personally, I'm I'm not unexpecting this kind of stuff. It kind of sucks though because I do have some bets on ARK. Oh well. And then obviously I've got big chunk in like Enphase, and that thing's down like 5% today. Bummer. But that's okay. It's still up substantially. I mean, look at it. It's at 199. It's still up like 80 points. But anyway, what kind of bets can you make in this environment? Well, you can make bets on the VIX. Like one thing that I like to do is this right here is the short-term VIX, shorting it. And when the VIX skyrockets, this falls. And so what you could actually do is when this has like a large fall to the downside, you can buy this SVXY, and then sell it when that VIX falls again. It does the opposite of the VIX. It's not, I mean, it's okay. The other one you could do is UVXY. And this one moves with the VIX as well, so just another way. And sometimes what people do is they'll actually buy calls on this because when it jumps, volatility goes up at the same time as this goes up, which is obviously good for buying calls, right? Whereas the other one, volatility is going down, not so great for buying calls. Twitter's actually still surviving here, and so are the oil stocks. But look, the minutes are going to come out. We'll go through the minutes. I'm not super scared by the minutes. I'm just aware that we are going to have a lot of fear right before every time the Fed does anything. And look at this, folks. On the QQQ, we got rejected at 61.8. We literally hung out at 50 for a minute, and we're right back to 38.2. I have not moved my little triangle here. I would not be surprised if we got a retrace to 23.6. That's painful, but these lines are buying opportunities. If you're long this market, in my opinion, these lines are buying ops. I don't think we're going to get back to 0% fib on just the Fed. It would have to be like further crisis with Ukraine or something. So anything here, anything between 38.2 and 23.6, in my opinion, probably looks like a buying opportunity on the QQQ. Remember, I said I was going to short QQQ if we got to the top third. We actually didn't make it to the top third. Oh well, it can't be perfect all the time. Anyway, thanks so much for watching. Good luck out there. Stay strong, and folks, we'll see you in the next one.